All right, so the market's holding on to most of its gains, and the Midcap Index is the one that's been really running away. If you talk about some of the movers and shakers on Nifty, Yes Bank is now looking at pressure. Interesting. It's quite a knock on the stock that's come through. Let's just pull up the intraday. Yeah, pretty much heading to the lows of the session. That is Yes Bank for you. Banks anyway have been sort of not the best performers in today's trading action. Let's get some more ideas in on the trading side. Sandeep Wagle is with us. Good afternoon, Sandeep. What stocks are you going with today?
Afternoon, Surbhi. I would go with the buy in a IGL, stop loss of 303, target 318, and a buy in a Kotak Bank, stop loss 1284, target 1314.
Okay, fair enough. That's some trading ideas. By the way, this news coming in on Coal India buyback. Let's just pull that stock out. I think up to 4.46 crore equity shares. Maximum offer size is 1,050 crores. Tender route at the price of 235 rupees. 235 rupees per share is what you have. That was, of course, known. So that's been given the formal approval. But let's take some more stock checks. Big decline in a couple of these capital goods names. Cummins is down actually 5%. So that's quite interesting. Just pull out that stock. And on the upside, of course, Vodafone Idea. Mr. Wilson, Vodafone Idea 10% higher. Is it just pure short covering, or you think the market's hoping that that perhaps from here on things could be better?
See, I don't think that market is really expecting the financial health to really improve, or maybe the fundamental changes. But yes, you are right. Maybe short covering and some kind of improvement in the EBITDA margin, or maybe better than expected EBITDA margin, is probably really seen the things by making the stock to move up. And in fact, we have been seeing these particularly in case of Vodafone Idea, that the longer term chart is making the lower bottom every time, maybe with the passage of time. But I don't think that with losses of such a big magnitude on a quarterly basis you can really sustain, though they have declared a rights issue of 25,000 crore. Modalities of that has to be worked out. Of this, about 19,000 crore will come from promoters. But unless until you really have some kind of relief coming in for the entire sector, I don't think that things will really be working out well. So maybe from a trading perspective, the things are looking positive today, but we have been in fact saying that look from exit from the stock for the last couple of years, particularly from this Vodafone Idea and as well as from the Bharti Airtel as well.
Okay. All right, Mr. Tulsian. Thank you very much for joining us on the show today. Always appreciate your time. We'll just take some more questions with Deepan in a minute, but let's now get that special conversation going. India is getting its first ESG fund, and the person who's going to be running this fund is no new name to this market. Abhay Laijewala, MD and fund manager for that ESG fund at Vendors Capital, is joining in, and with him we also have Andrew Holland. Gentlemen, good afternoon, and thank you so much for taking out the time and being here with us. Interesting day as well, considering we've finally got the 25 basis points rate cut. But Abhay, I want to start with you first. ESG investing, it's quite interesting. It's picking up internationally. Why this fund now? How much are you looking to raise? And more importantly, are there enough companies? I mean, governance has become this massive word, this big issue in the last 1 month. How do you plan to go about approaching this?
Thanks, Surbhi. We clearly felt that in a country like India, with close to $100 billion in management and equities, there is very little in terms of ESG. And we intend to come out and fill that gap, meet that gap. And India is also the only country in emerging Asia that does not have ESG solutions for investors. So this is a trend that's sweeping the world as we talk. There's close to 25% of global assets under management now being invested in ESG. And there is no reason why India should be an exception. And therefore, here we are, conceived as an ESG fund, and we were born as an ESG fund. We've already invested on the 1st of February and now have a solution to ESG investing in the country.
Abhay, hi, good afternoon. So the second part of Surbhi's question then, are there enough companies, and especially for the G part, because the governance issue is something that we have seen over the last 2 weeks, and how that's led to this this big move where more and more money is actually getting into companies with good corporate governance standard, and the ones with slightly poor standards or much poor standards, we've seen a complete derating of those stocks.
Very, very, very true, Anuj. Clearly, there is now a very, very strong correlation between well-governed or highly ranked ESG companies and value destruction or value re-rating. In terms of are there enough companies? Yes, there are. So we are going to be looking at the Nifty 100 universe. And from that Nifty universe companies, we are going to screen out companies on their ESG criteria and then integrate ESG with fundamental investing. So our final universe will be a list of 15 to 25 stocks. So to your question, are there enough companies? There are, and we have found not much difficulty in identifying these companies which have gone into our portfolio. Our rankings are going to be done by IIAS, Institutional Investor Advisory Services, and we have an exclusive association with them. IIAS needs no introduction. They are the pioneers of corporate governance. They basically build the narrative for corporate governance here in India, and we are very privileged to be having an exclusive association with them.
So, Abhay, I mean, in terms of stock selection for a fund like this, I'm guessing it's going to be entirely bottom-up. But what other filters, apart from ESG, would you be putting in? I mean, are you willing to pay a huge premium for growth? Will you go by certain sectors where there's higher, visibility? Will you only go by value? I mean, what are the other themes that you like in the market at the moment, and they fulfill the ESG criteria as well?
So, Surbhi, you're right. ESG alone cannot be a source of alpha generation. ESG has to be complemented with detailed financial analysis. And then when you integrate ESG with the various different financial parameters on which you look at the companies, you do pretty much a 360-degree analysis and arrive at your final portfolio selection. In terms of our approach, apart from ESG, we are going to look at companies that generate returns in a durable manner, companies that have resilient businesses, companies with very strong managements, companies that have a history of responsible financial management, efficient capital allocators, etc. So if you really look at many of the variables I talk about, you'll probably get a sense that this is a fund that basically looks at the longer term, because the ESG benefits tend to accrue over the long term. And therefore, that's the kind of selection of companies based on ESG and the many criteria that I talked about.
Fair enough. Of course, Andrew Holland is also with us. Andrew, good afternoon. Now let's talk about the other issues concerning markets. Your thoughts on today's monetary policy, that stimulus that RBI has provided, and your thoughts on what this means for the market.
So, I mean, no surprises in 25 basis points, Anuj. I think if anything, it's kind of opened the door for more. I don't know why he just didn't do 50 and excite the market even more and give the economy the kind of lift it needs, because that's what he's really alluding to in his statement. That we need to get the consumption kind of picking up again. So maybe he has one eye on what the government might be borrowing, but I think come the next monetary policy, I think you'll find that globally everyone anyway has become very dovish. So he'll be given another opportunity to reduce interest rates by another 25 basis points. So I think that's the theme that I'm seeing in terms of from his statement and his kind of body language. So the markets can rejoice in that. But obviously it's kind of factored in the 25 basis points, and whether the market believes what I'm saying in another 25 basis points, we'll see.
So, Andrew, good afternoon. If the RBI is going to be benign and the government is anyway in election mode, so there's obviously more handouts being given. And if the earnings are okay, your take on that, then basically, are we looking at this market really building up ahead of 11,000?
Listen, I think that's possible, but unfortunately, it's the global factors that worry me more. I do believe the US is in recession, and I think the race to the bottom between China, Europe, and the UK is on. Who's going to be next? Now, all of that leads to the fact that I think earnings will be downgraded, and therefore markets have to take a fall at some point. Thereafter, obviously, the Fed will have to reduce rates at some point, if that's correct. If we're in that normal run-of-the-mill recession, then interest rates will have to fall, which is why I think, I'd see this as any opportunity of our market fall to be buying the quality stocks, the large cap stocks. I think there's still going to be more pain in the kind of mid cap and small cap in the very short term.
Which is what was my next question, Andrew. I mean, if you're expecting now from here on more rate cuts and perhaps cost of capital to come down, with mid caps already having underperformed so much last year and the start of this year, logically, shouldn't it make sense to perhaps now try some, put some money into the mid caps?
You can dip your toes. That's obviously taking a call. But what holds me back from saying yes, I would look at mid caps and small caps is that we're in this second phase of pain for the NBFCs, and that's really been translated a lot more than it was the first time around to the real estate sector. So if anything comes from under the carpet in that respect, and we're seeing quite a number of problems out there, then the whole system will freeze again, and that's my concern in the short term. And I think that's what's affecting investors' views on small and mid caps as well, because they will just get a further leg down if that was the case. So I think we're a little way away from that. So I'm talking about a picture of lower interest rates maybe 2 to 3 months on, not quite now. And anyway, even with today's rate cut, it's not going to be translated or transmitted into the system for some time, and that will take time anyway. So I think the pain in the short term could be in the NBFC and real estate sector.
So, Andrew, I know you are on Twitter. I put a poll out because I was really curious about this. I wanted to do a dipstick on auto stocks specifically, whether this is indeed the bottom. It's been a painful 6-7 months for this sector. What do you think, and what else would you buy in the market if you would?
So, the auto sector, as I think I mentioned last time, in my view, is a structural sell. I think, if you look globally at what's been happening and look at the results that have been coming out, this is what's going to happen in our industry. And listen, it's nothing wrong, is that they're still going to get growth. It's just going to be a lot lower than everyone was expecting. And the problem with that, when you have lower volumes and you get your operational gearing reverses, and unfortunately analysts don't get it, and therefore whatever forecast they have at the moment, they need to take another big red pen and just slash them again. So that means that the derating of the sector has only just begun, to my mind.
Okay, I'm now getting back to Abhay for one more question that I had, Abhay, on this ESG fund while I was going through what you were saying. Is there going to be a market cap segregation as well? Are you going to divide stocks according to that, or is it just it could be just the largest of the large caps, or smallest of the mid caps as well?
No. It's basically the Nifty 100, right? So this is large cap. So this is companies from the Nifty 100 universe.
Okay.
Companies from the Nifty 100 universe.
And Abhay, let's also get your market call. Do you agree with Andrew's larger view that there are perhaps more risks than opportunities with this market?
Yeah, there's always a combination of risks and opportunities. So concur with Andrew.
Okay. So Andrew, from here on, you reckon the biggest risk for this market is still global in nature and not domestic? I mean, we've been talking about this May election as perhaps one reason that our market has underperformed this year already. But then, if you take data from October onwards, perhaps we are in line or slightly better than the MSCI emerging market. Your thoughts on that?
So, basically, Anuj, we were one of the best performing markets last year. And why was that? It's because, the world was expecting higher interest rates. That was affecting a lot of emerging markets, and they fell anywhere between 5 to 30%, and we held our own. Coming into this year with the Federal Reserve Powell, taking a complete U-turn and becoming from hawkish to dovish within a few weeks, risk assets such as other emerging markets, which anyway were kind of massively undervalued compared to India, have seen a lot more of the flows. We've seen some flows, but obviously not as much, which is why we're one of the worst performing markets so far this year. So what the market's saying is that, listen, the Fed's on hold, that's great news. Australia's saying we might reduce interest rates, the same in Europe too. So all of that's kind of giving everyone comfort that everything's fine. It's not, because if you look underlying, the kind of big numbers from the US in terms of jobs data, auto sales, home sales, new home sales, mortgage applications are all falling rapidly. So the underlying economy, to my mind, is in recession. Therefore, you're going to have that translate to earnings at some point, which means that the markets will have to take a fall. We'll be dragged along with that, but once the dust settles, we'll find that we're in lower commodity prices, lower interest rates, and that's the opportunity that you need to buy Indian stocks.
Okay, fair enough. Well, all the best with the new fund, Abhay and Andrew. And Andrew, before we thank you, this last 2 or 3 weekends have been quite crazy in terms of Premier League football. Once again, City back on top, and the manager saying that even United is in the race now. Your gut feeling, who's winning this year?
It's a horrible dilemma of
Yes.
trying to say, do I want Manchester City or Liverpool to win anything? But if anything, I have to stick to my hometown, which is Manchester. So let's hope it's one of us that win it rather than the other side of the Mersey.
All right, we'll find out, of course, in May. Is it just about 3 months from here? Thanks a lot, gentlemen, for joining us.